Hi everyone, JJ here with The Art of Value. Welcome. Well, today I'm going to look at a very recent interview with legendary investor Seth Klarman. He doesn't give many interviews at all, but he gave one to CNBC. I'm going to summarize it and comment on the interview. He talked about the everything bubble. He talked about Bitcoin, the economy, many things. So let's have this chance to see what Seth Klarman has got to say. To introduce Klarman, Becky Quick from CNBC, who is well known for interviewing Warren Buffett and Charlie Munger as well, mentioned that he's from the Baupost Group. That's his hedge fund. She mentions that they've been trying to get him on the show for years, so it is a rare interview. The reason the media shy Klarman was giving this interview is because he's launching the 7th edition of Security Analysis, an iconic investing book from nearly a century ago now by Benjamin Graham and David Dodd, a value investing Bible, as it were. In editing and revising the new edition of Security Analysis, he said that he felt like a lot has changed since the last one, so there's quite a bit to talk about. He was asked what he thinks has changed over the last 15 years, and straight in he says, I think we've been in an everything bubble. But there are nuances to that. Keep in mind that Seth Klarman is an incredibly respected investor. This is not someone just throwing out that he thinks it's an everything bubble. It's one of the legendary investors, highly respected around the world and on Wall Street and amongst the investing community of some of the world's best investors. He says a lot of money has flowed into everything in recent years, precipitated by low interest rates and zero interest rates, and a lot has changed in the business world as well. He said technology has accelerated over that time, if anything, and that's disrupted a lot of businesses and created challenges and opportunities for investors. He said some asset classes have become increasingly popular, including private credit, which has had its day in the sun. He said there's been a lot of speculation during the bubble, as there always is in bubbles, with crypto, with meme stocks and the SPAC boom. And importantly, he says the book Security Analysis has some reminders about speculation, the dangers of speculation, and also remembering what kind of environment you're in at any one time. Another important point in relation to the bubble, Becky asked him what the opportunities he sees at the moment, and he said it's about 4 out of 10. The environment right now is about 4 out of 10, so that implies that there are some opportunities around more than they were before. Importantly, he said there haven't been many downside opportunities for about 10 years, but 2021 was a blow-off year, he said, implying it's the blow-off to the bubble. And he said 2022 was a correction, and he said now we're recovering a little bit. So he doesn't know if that's going to go on, the recovery that is. So I think that's really interesting that he's seen the bubble. He's not saying that we're in the peak of the bubble at all, which some headlines might imply. He's saying that we've been through a correction and there's a recovery, but there's no guarantee that it won't keep going down. Don't know how far it will go down or whether it will keep going up. In terms of opportunities, he says it's a good time for him to start wading in because you don't know if it's going to go down anymore. It could go down a lot, but you don't know. But he said it from experience, when you do see some opportunities around, about 4 out of 10 on the scale, then that's a time to wade in. If you're watching on YouTube and getting value out of this episode, I'd really appreciate you hitting that like button to help spread it to more people. Also, we're well over 1,000 subscribers across YouTube and Spotify now, so if you're not subscribed yet, maybe think about subscribing if you're enjoying this episode. Becky points out that back when Graham and Dodd wrote the book, the country and economy was dominated by railroads and factories, and she asks Klarman what he sees as the common thread to back then, the link to back then to now, because it does seem like a very different world, talking about SPACs and cryptos. Klarman says what he admires about Graham and Dodd's book is that they try to look outside the environment that they were in at the time, which was the Great Depression. They knew that it was an unusual time and they knew it wouldn't last forever, so they tried to write something and look long term. And Klarman says that's important for every investor to kind of look at the environment they're in, see what may be short term, try and look long term and realize the environment that you're in and it could change. It won't be like this forever. And so you're investing for the long term. You have to think about what's going to happen and what is happening now that is just around at the moment. I think a lot of new investors in the past few years saw interest rates at zero or very low and thought it would be like that forever, and they haven't seen high inflation, so people couldn't see that it could be high inflation again and interest rates could go up. So we have to look at our environment, and he's talking about there being a bubble. And when you're inside a bubble, sometimes you can't see it. You think that this time will be different, that the world has changed forever, and it may not snap back. Klarman was asked what he thinks value investing is, and he is known as a value investor. He says it's not the academic version, which is usually buy the stocks that are cheapest. He thinks that Graham and Dodd we're talking about earnings power, not just buying the cheapest, which is a bit of a misconception. Value investing is often thought to be buy the cheapest and not the best. And indeed, it's often been pointed out that Benjamin Graham, even though he was known as this net value investor, buying the cheapest and not caring about quality, nearly 50% of his net worth came from Geico, which was a long-term compounder. Klarman says that the growth possibilities of a business are important, even if they're hard to determine. So this comparison, this difference between growth and value investing isn't as big as you might think. Klarman says the way that he sees it is there aren't value stocks and growth stocks, that every company, every stock can have value. It just depends if it's overvalued or undervalued. So he says we have to have a way, a mechanism of working out what a business and asset is worth to see if it's undervalued or overvalued at any one time. And that, of course, is security analysis. In terms of growth companies, he said that investors need to think about not just the earnings today, but what they will be in the future. And that means that thinking about if the business could be disrupted, so the earnings could be less in the future, or if they could be 50, 100% more. So in this fast changing world, he said we really need to think about that now. Okay, this is an important point. He mentions Warren Buffett. He says that Warren Buffett works out what the quality companies are, the best companies in the world, but then he waits and pays an attractive price. He waits for an attractive price. He just doesn't pay up too much. So there's that value investing streak. He's willing to pay more of a fair price than he did, say, in the really old days where he was looking for Ben Graham type investments of just buying the cheapest possible. But now he looks for very quality businesses, top quality business, but he's not willing to pay top price for those. He will buy them when they're cheap. And you do notice that over time, if you follow Warren Buffett's investing, he will actually buy at a pretty cheap price when people aren't buying what he's buying and people are wondering why he's buying it. Here, Becky pointed out that Warren Buffett's advice is to buy the index for most people. He said that only a few people, Becky mentioned 5 people that could actually beat the index on a constant, sustainable basis, and Seth Klarman happened to be one of those. So Warren Buffett says Seth Klarman is a great investor like that. But Klarman said even in terms of buying the index, you can get it wrong, because even though it's a good thing to do, if you buy at the wrong time, say during a bubble, you could buy the index when it's near the peak, and then it could go down, and investors tend to buy high and sell low. So even index investing is like that, and then investors get despondent and they sell out at the wrong time. So even index investing is quite difficult from that point of view. Klarman also mentions that investors need an edge. There's a lot of competition out there. He's talking really about professional investors, but they need some sort of edge. And that's where he talks about investing in what you know, which Peter Lynch has talked about quite a lot. So getting that edge from what you know the most about, or where other people aren't looking. And more on getting that edge, he says that on the edges of things that people are looking at, and if people are throwing out the baby with the bathwater, that's a good place to look. Where people don't want, you can go in, and he says the markets can be quite mispriced in that situation, so you can find things that other people don't want, but still might be great investments. In fact, good opportunities at the time, underpriced. In opportunities in markets that aren't efficient, he mentions Meta. He said that a huge company like Meta, even that, went down to 100 and then up to nearly 300 just in the space of a few months. So he says that inefficiencies do exist, and that was a prime example. He was asked about the opportunity if he was just starting out today, if he thinks that there are opportunities for young people, and he said yes, but they would exist more globally than they would have before. And someone should ask themselves, what would they be good at? What would be their edge? Say if they're from somewhere else in the world, that could be an edge if they know more about one particular country than another. And we know Li Lu, he came from China, so he's able to invest in China. He knows all about that culture. And he immigrated or was a refugee to the US, so he knows about both countries. He can invest more easily than many other people in these 2 biggest economies in the world. Klarman says he spends quite a lot of time thinking about technology and technology companies, and that is partly because he doesn't want to be stuck on the wrong side of the trade. He doesn't want to be in a company that's being disrupted by technologies, and he's tried to understand crypto. He's looked into it quite a lot. He's trying to find value there, and he says he just doesn't really see value in it. He doesn't understand the value there, the proposition, so he keeps away from it and invests in the things that he's interested in, his circle of competence. That doesn't mean to say he doesn't think it won't go up. It might go up. He just doesn't see the value. They pressed him a bit more on crypto, and specifically Bitcoin. They said, why couldn't it be this digital gold concept? And he said, well, it's convenient. The maths problem's convenient to make it look like gold, he thinks, but he couldn't see the way that it is like gold. Gold's had thousands of years of trust in it, and people run to gold or go to gold in times of stress in particular. Can't see that happening with cryptos. And he said part of the problem with cryptos is there are thousands of them, and gold isn't like that. So he can't see that it is going to be like gold, even though that's one of the main arguments for a store of wealth with Bitcoin in particular. He said he's a Bitcoin skeptic, and he says it's like catnip for techies, a very seductive idea, and he'd never say it won't work out. He's just not where he's putting his investment, but he likes to know about it. He was asked about his macroeconomic views. Of course, they all are, and he said he wouldn't trust himself with a view, but he does think that there could be a downturn in the economy, but he doesn't really know. And the way that he invests, he said it's not important for him to know that. He's a bottom-up investor in terms of the companies. He doesn't invest in a macro way. We can contrast this with Stan Druckenmiller, who I've made videos about recently, who's forecasting a hard landing recession. He invests on the macro, so it's really important to him. He's got to get it right, or it will change quickly if he's wrong. That's the way he does, and he hasn't had a down year in 40 years, so he's been successful in that, but a very different way of investing than Seth Klarman. If you're watching on YouTube, I'm going to leave a link here to the Stanley Druckenmiller talking about the economy, how he's investing right now, how he sees the situation. It's an interesting contrast to Seth Klarman. And thanks for watching or listening, and I'll see you in the next one.